Hey guys, welcome back to the channel. In today's video, we're going to be talking about increasing your credit score. In the previous videos, we went over what is a credit score, what makes up your credit score, a little bit of a deeper dive into the different buckets that make up a credit score. And today, specifically, we're going to be looking at increasing your score to get better rates on things that you're looking for. Before we get into the video, guys, go ahead and click subscribe, turn on notifications. Let me know in the comments what you guys think. Now, couple of the tips. One, pay your credit card balances strategically. We've talked about the 50-30-20 rule. Now, utilization within a card, and I always use the exact same example, a $10,000 limit, you want less than a 30% utilization, 20% even better, 7% or less even better, guys. This has a absolute tremendous impact on your credit score. When your balances start getting over that 30% limit, you can actually start seeing your score decline. Once you hit the 50% or higher, you will actually see your credit score decline faster and faster as the balance of those cards get higher. Now, this is one of the biggest influencers because remember, 30% of it is the debt that is owed, meaning that credit card balances, again, you're living outside of your means because you're supplementing income with credit card debt. You're not repaying the debt in a timely manner, which will drive your score down. Now, on the flip side of that, guys, you can also ask your credit card companies to offer you a higher limit. So in the example of our $10,000 card, 30% utilization is $3,000. If that card got raised to a $15,000 limit, even a $20,000 limit, the 30% varies depending on what you have. So essentially, you could see a much higher score just by having a higher limit on the credit cards that you already possess. One of the big drawbacks with this, guys, is one, it is a inquiry, which we know is 10% of your score. Second one is you do have the opportunity to raise your debt much, much higher and your debt cap much higher, meaning that if you are one that is prone to borrowing, you could see your $3,000 limit go to a $6,000 limit very, very fast if you are utilizing the credit cards or the essentially the limit increase that they gave you. Now, another one we look at, guys, is paying your bills on time. Again, payment history is 35% of your score. So it is absolutely vital, guys, that you pay literally every single bill on time, setting them up automatic. That is what I definitely advise. If you're younger, if you're starting to establish credit, you can actually be added as an authorized user. So you're kind of just piggybacking or riding on someone else's good credit as well. One thing to monitor, guys, is the government in the United States actually gives you access to one free credit report every single year. Every 12 months, you can have a copy of your credit report. Now, making sure that the things on the report are yours. We've seen a lot of errors. We've seen a lot of mistakes. We've seen a lot of issues with credit reports that a lot of people do not fix, whether it's collection items, whether it's items that shouldn't be on there that are not even theirs. You have to be in charge and really take ownership of monitoring your credit report and making sure that everything on there is accurate and they are charges and they are balances that you have. Now, with the free credit reports that we offer here, you will not get the score, but you do get the free report. Now, some of the big things that can affect your score is dealing with collection accounts. Now, collection accounts are one of the biggest negative impact things within your credit score, whether it's a medical collection, whether it's, an old auto loan, whether it's a credit card that you had. These collection accounts can stay on your report for years and have a very big detrimental impact on your credit score. Seeing about paying them off, talking to collection companies, making sure that you can get them as fast as you can, getting them paid off, especially if they are newer, because again, they have a absolute huge impact on your score. Now, one of the things is if you already have significantly damaged credit or you have no credit at all, a lot of people will utilize secured cards. So what a secured card is you set aside X amount of dollars, let's say $500. In turn, a financial institution will give you a card with a $500 limit. Now, with that being said, you're kind of backing with cash the limit that they're giving you on the card. So for instance, if you have, again, poor credit or no credit, they don't know your credit history or they don't know your repayment method or how you're going to utilize the credit. Having the secured card gives them releases them kind of the liability, because essentially if you do not pay back the money or if you are not making your credit card payments, they can close that secured card. They already have the funds that they will take to pay off and close that credit card versus it going to collections, everything of that nature. This is an excellent way to build credit. A lot of financial institutions will not lend at all to people who have no credit or have bad credit. Secured cards are always an option. Now, another thing that we do have here, again, in the United States, is getting credit for rent and utility payments. This is something that I've actually seen quite a bit. Rent can be reported to your credit bureau, even some of your regular consumers energy, DTE. There are a couple other ones that you can actually report to your credit report, and they can build up a credit history where you might not have one. Now, this is pretty low on the impact that it does have on your credit, but it does have a impact on things that you're paying already. So if you're looking at multiple lines, if you're looking back at a payment history, they can see, something like your electric bill, that you have paid it every single month, and you've paid it every single month for a couple of years. Same with rent. If you're renting an apartment, the rent can report to your credit bureaus, and therefore you can build credit and establish your credit. Another thing we always look at, guys, is adding to your credit mix. Now, if you just have one single type of credit, which a lot of people do, just have a credit card, they might not have any open loans, maybe auto loans, mortgages, things of that nature. It's good to have a mix of credit, because some of the bigger items you might not get approved for based on score alone. So what I mean for that is, if you're looking at buying a car, and let's say you have a credit card, you've always paid it for years, you have a good credit score, you have a 720 credit score, A+ credit, that is going to determine your rate. But not having auto loan history, again, a lot of lenders will not lend to you, especially if you're looking for a mid to high dollar amount vehicle, even if you have the ability to pay, because you have no credit information or you have no repayment history. On an auto loan, the chances of getting an auto loan may be reduced, or you may get approved for a much lower amount than what you're looking for. So that would require you to either bring cash to the table or look for a less expensive vehicle, just because you do not have experience or you do not have credit with a specific item that you're looking for. Similar goes with credit card balances, credit card limits, and also with unsecured lending limits. If you have lower limits, let's say every time you have a card, all of your cards are at $2,000, and then you come in and you want a $10,000 card. A lot of times lending institutions will look at you and say, nope, much lower card. We're going to start maybe at 3, maybe at 5, depending on the history. If you really do need to borrow that 10, chances are they're not going to. Again, just because you have a limited credit history and you also don't have a good mix of your credit history. So guys, I hope it gave you kind of an insight on some easy ways to build your credit. Some of the biggest things, guys, paying down those cards, not carrying the balance on the cards. They are super, super impactful when it comes to the amount that you carry if you are above that 30% utilization. And again, this is about taking ownership of your finances, really owning them and taking accountability. If you have cards that are above that 30% utilization, they are negatively impacting your credit score, which you definitely have to look at. All right, guys, so that'll do it for today's video. Let me know in the comments what you guys think. And as always, thank you guys for watching.